Good morning and welcome to the Trading Lounge and the Day Ahead Report. And here we're looking at the Dow Jones here, and the reason for that is that just to point out that the 13,000 is still the support here, and what we're looking for here is we always wait for the market to come into a support region. We always wait to see what sort of bounce comes in and what sort of pattern that bounce here makes. And in this case here, this bounce here has been a corrective bounce. So when we take a closer look at that bounce as such into here, we can see that the bounce is in three waves here, an ABC. So that makes it a corrective pattern. So technically we should see a new low below this area here. This would be the same for the S&P 500 as well, the 1400. So this sharp move down through here, we understood this to be a strong third wave. So we've either got a wave 4 here and a wave 5 to come down, or we've got a 5-wave structure to the downside here, and we'll be pulling back up and then moving down as well. But either way, we still expect a low to be taken out through here. Just refining that a little bit here on the S&P 500, this is the ABC bounce here that we've been tracking. So that ABC bounce, we go back to the Dow Jones, is just this ABC bounce here. Going back to the S&P 500 now to look at this situation in here, moving to the downside. So yeah, look, we can have that as wave 1, wave 2, wave 3 here. We could have this as wave 4 into here and wave 5 down into here, making wave 1, like 5 waves down for wave 1. And then we would look at an A and a B and a C wave back up here for wave 2, and then moving down through that way. The 61.8 retracement level for this impulse wave to the downside, if that was the case, from this high here down to this low here, would bring us into the 1425 there, which is the last consolidation area through up here. So that's a real possibility as well. We'll just see how that unfolds. But I guess one of the points that I wanted to make sort of clear here is that, you know, the Dow Jones is still on that 13,000. The S&P 500, we had well, the 1400 mainly is their support. We know the 1410 is there as well, and this would also bring us through to the Australian market as well. Just on the daily chart here, I'd kind of like to look at this as a classic pattern at the 4500 here, 5 the second strongest number. So we knew that there's going to be some type of correction through here. Sometimes we just don't know, what it's going to be, but in most cases it's a classic pattern, and that seems to be the case as well. And the classic pattern is simply the arrival at the 4500, a reaction, finding support at the 4450, and then creating the first high above the level. And excuse me. The first high above the level was around the 4580. So an equal swing below the 4500 would give us down into the 4420 area here, which is also close to the tops of these guys here. So that would be an equal swing low. The current low there is around the 30, the 43.30. So that's that's a reasonable sort of low there, and that's a possible low point there. But you've got to keep an open mind, because the price is under the 4500 here. The bias would be to the downside. If we take a closer look at this this correction through here as well. I do see this as a corrective pattern. It's just a matter of finding the low for it, which is always tricky business. Sometimes it's clear and sometimes it's not. On the 1 hour chart here, if I just squash this up for a moment, we've been through this before, but just wanted to point out a few things here. We know that we're getting reoccurring corrective patterns in this market here as well. So, but what we need to work out is that the moves to the downside are quite quick, and the moves to the upside here quicker to the downside, slower to the upside, quicker to the downside, slower to the upside, quicker to the downside. And also each correction here, as we've pointed out through here, is getting larger and larger. So yeah, so it is trending sort of to the downside, and we haven't really seen any volume come into the market as such yet either. In the up moves to the market to give that real support. So we don't know that. We yeah, we're just looking for the low. There's not much we can really sort of say. It's going to be influenced by many things. Of course, the RBA rate will be coming out today as well, so that probably, if there's any change there, that will revalue this as well. But we were looking at the 44.50 as a support here, but I wanted to point out, if it breaks, then the swing low is the 44.20. Yeah, and obviously there's going to be other supports in here as well, but we're not in a trend yet as such. You know, we just need to be a little bit careful. Once this correction here is over, then we can look to the upside. With the European markets as well, the DAX and the FTSE are a little bit the same in terms of their pattern. This is the FTSE here, 100, and if we bring this in here at 5,800, it gives us something to work off here. Now, this pattern here across the top here, it can be counted in two ways. Okay, so it's important to understand both of them. This move down through here is in 5 waves, so it can be an A wave. This here can be an A, B, C for a B wave as a corrective wave, and this can be a C wave here. That's in 5 waves here. So we could have a nice A, B, C correction through here, and that could be complete at that point there. Okay, so that works. It works nice here. We've got a 5, 3, 5 structure here, and we could quite simply be working up from that point there. So that's one thing, that one way of looking at that. The other way here is to have this as wave 1 down, and then an A and a B and a C wave here for wave 2. So we'll be looking at a larger impulse wave to the downside, such like this here, and then that would be the wave 2 there, because it hasn't taken out the top here, and this would be part of wave 3 here. So in wave 3 here there'll be 5 waves, so we'll be looking at this down for 1 here and back for 2 here, and then moving down that side. So basically what I wanted to point out here is that this particular pattern here is working itself into a corner, and very shortly we'll be able to see which way it's going to go. So yeah, so just sort of got to be aware of that. If we have a look at this here at the FTSE on, and the DAX is the same as well, with the FTSE here, just bear with me here. So this was the 5 waves we're tracking down for the C wave there. So if I just go back just to point that in here, that wave structure coming down there is in 5 waves. So that could be the wave 1 for a larger move down, or wave C completing the A, the B and the C here. And this is important too, because the FTSE has also got a relationship with the Australian market as well, so there'll be some bearing on that as well. So that 5 wave structure down. Now we can count this structure up through here in both ways as well. So far we can count it as an A and a B and a C wave in here for the A wave, a B wave into here, and a C wave into here with 5 waves, the 1, 2, 3, 4, 5, the same as this has got 5 waves to the upside. It also can be counted, so it can be counted as a corrective wave to the upside and finding resistance at supply levels here, but it also can be counted in a positive light as well, because we do have 5 waves in this first little wave here. So that's an impulse wave here, we've got a corrective wave here, and we've got an impulse wave here as well moving to the upside. This one can be read both ways really, because it's sharp. So we've got a series of 5 waves, 5 waves and 5 waves, so it can be a series of 1s and 2s to the upside. This structure down through here at the moment, that's also in 5 waves to the downside at the moment, so it's got a slightly bearish connotation there in terms of the 1, the 2, the 3, the 4 and the 5. So that means we'd be looking for an ABC back up. Now the ABC back up could already be in place. It could be the A, the B and the C to here, or this little ABC here could just be the A wave, and we get a B wave to here, and we get a C wave up to this roughly around this area here, and failing in here and then rolling over from there. In that case this would be an A wave, a B wave and a C wave. If it takes the bottom of this out, then we've got then we've got a larger bearish. Technically, if it takes that low out there, then we've got a bear market. Okay, so we won't know until that. But what we do know in the short term is that because we got 5 waves here, that means that after we get a correction here, which may be to the 50 here, or it may come back up to the 65 area through here, but once that's complete, then we should get another 5 here. So basically a 5, 3, and 5 structure to here. Once that's completed there, then we'll either be working higher from that point or lower from that point. So it's still going to take 2 or 3 sessions to unwind and to find out where we are on that one. And the DAX is the same. I won't go into the DAX, but it's the same pattern as well. And there will be influence there, as I mentioned, to the Australian market. So there should be an interest in this particular larger pattern here. So yeah, the bias is that it's a bullish pattern as such. So we'll see how we go with that. Right, let's have a look at commodities, as the US dollar is still pushing a little bit higher. Okay, the US dollar here, we'll have a look at this more closely when we have a look at the Forex, but look, basically what we're looking for last time here was we're looking at 5 waves up through here, the 1, the 2, that can also be the 1 there, 2, and the 2 here, but we're looking for the wave 3 to come up. We think that wave 3 is in there now. So as we see a wave 4 pull back through here, then we're going to see the commodities rally as well, but bear in mind that rally is probably just a 4th wave to the upside, and as this would obviously, the US dollar is going to be doing the mirror opposite. So when we have a look at gold, for instance, with gold here, we were looking, as you know, we were looking at wave 3 here, and we worked through wave 4 to the 1727 sort of area there, and we're looking at wave 5 to come down. Wave 5 to come down will be in 5 waves as well. What is obvious is the 3rd wave here, because it's the strongest. So I've got a feeling this is just the 4th wave through here, but it could be the low in here as well. Just have a look in a moment, but the 1650 here is the main support area, so we're going to get a bounce off here as well. And as you know, this is subgroup 2 area here, 65.72 on the 80. So the price is obviously going to be working through that sort of area there. So when we have a look at this last trend down through here, it's still not that clear. There's a couple of ways to count that. I know that that's the strong part through here. Just at a real rough guess, I would say that this is down to 1 here, back to 2 here, then this is all the 3rd wave here, and this is a 4th wave here. So it would be something like down for 1, back for 2, down for 3, an A and a B and a C for wave 4, and then down for wave 5 through to here. Just give that a little bit of time there, see how it pans out. But after any strong emotional event, it takes time to get over it. So wave 4s tend to be sideways and complex, so just be aware of that. So any short trade here would really need that 1680 as at least 2 retests in there for that to play out through there. And we just have a look here. So it can go high as 1690 there, so just bear that in mind as well. The oil market is sort of much the same sort of picture as well. This is a 2-hour chart here. Looking for the wave 5 to come down through here. That may be in place there now, because that's obviously the 3rd wave in here. That could be the 4th and the 5th just to here, or we could be doing the 4th here and the 5th here. Either way, it's just best to allow it to, work with that number, and with a little bit of patience, you can normally work out if this is going to be a corrective bounce or not. So this was quite complex here, so this may also be a complex pattern in here as well. So let's just give it some time. Obviously it's going to follow stock, and you know that stock has got support on the on those large numbers, and also the US dollar comes into this as well. So while the US dollar is pulling back down for wave 4, this is likely to be pushing to the upside as well there. So and you'll find that with the gold and the silver and the copper retesting 350 and so forth. So but let's not get too sucked into the bounce because we know where the US dollar index is, and let's have a look at that now. Okay, the US dollar here on a 15-minute chart here would be this. This is the wave 1 that we've been looking at through to here. That can also be wave 1 to here and wave 2 to here, so not that it really matters that much, but we've got the wave 2 there, and then we've been working wave 3 to the upside, which is basically up for 1 and back for 2 here. And this is the whole third wave up to here, the fourth and the fifth here for the top of the third. So we've still got the fourth here to unfold, and then we've got the fifth there, and I'll leave that fourth there because it's the fourth wave of 1 lesser degree, but the subgroup 2 area in here can hold that at any place within here. All the retracements have been very shallow through here, so we can also expect this to be shallow as well, but also looking for one more move to the upside there for wave 5 there, and the euro would be the same to the downside as well. So if we just come back on the 15-minute chart here, from the last retest high up through here, we've got wave 1 down to here, and as I mentioned, same with the euro as well, the dollar. This also can be a wave 1 over here, not that it makes any difference either because we still end up with the same result, but the wave 1 and wave 2. And then we've got the wave 3 to the downside with 5 waves in it, the 1, the 2, the 3, the 4 and the 5 down to here for wave 3. So we're looking at wave 4 here, can pull back to the wave 4 of 1 lesser degree here, and then wave 5 to the downside here. So that's what we're looking for there, and that would be probably in line with the S&P 500 and so forth, and the mirror opposite to the US dollar. The Australian dollar today, as you know, has the RBA rates at 230, so there's a slight bias to dropping them down another 25 basis points. However, that's just a bit of a guessing game, so you'd need to set the orders up in the market and just see how the first half of the day goes in terms of running the price to the upside here. But these are numbers you'll be working with here. The 103.72 would be the main number there. You need to be on the right side of that. Yeah, so there's not much you can say or do on these sorts of days, so just set the orders up in front of the market and catch any move that goes in either direction. It's okay to have positions on the, to go long and to go short. Just make sure that they're all set up and just use individual limit orders for those. Alrighty, well that's it. So we can still expect a bit of just recapping a bumpy ride while the Dow is still sort of retesting the 13,000 and the S&P 500 sort of retesting and bouncing around the 1400 as well. And obviously there's elections on Tuesday for the US, so we really need to sort of move those out of the way as well. But there could be some sharp moves there as well, so it's always good to have orders set. Make sure you've got all orders set in the market there. Yeah, so look, there's not going to be much volume in the market in terms of today and tomorrow. So do also the same as well. Just keep positions really small and or even stand aside until we've got a trend, because we don't have a trend in the local market as such. It's we're in a corrective move to the downside, but we can't confirm the downside just yet. We think that it's not complete, and we don't see any volume in there supporting that as well just yet. So it is time and place to be in the market, and it's not really obvious that we should be in at the moment. So yeah, just keep it light. Alrighty, well, good morning and good luck.